And I brought a special guest with me today, Tobias Levkovich from Citigroup, head U.S. market strategist there. We're looking at, Tobias, a third day of gains today, and you are one of the more bullish guys in the streets. Are you optimistic? Does this continue, or is it sort of the calm before the storm?
Well, we're a little concerned here that people are looking too much for an opportunity. The markets are going up here. We wrote a piece on sentiment suggesting that investors have gotten a little bit too excited. They think this is the opportunity. You kind of usually want to watch some sort of a washout in sentiment, not an expectation this is an opportunity. And we are concerned about tomorrow in Europe with the meetings. Our chief economist, Willem Buiter, has been saying that investors may be disappointed.
Hey, but Tobias, if you're concerned, as we are too, I mean, some of these problems out there, whether it's Europe or the United States, they're pretty difficult ones, not ones you're going to certainly fix overnight. You still have a pretty aggressive target on the S&P, about 1,400. That's about a 15% gain from here. You are concerned, so how do we get there?
Well, I think once you reset expectations on earnings and once you do wipe out some of the sentiment, rally potential comes back. Keep in mind, the average, call it bear market rally, is still over 40%. So moving 15% does not seem to be that much of a stretch.
And you think this is a bear market rally?
Yeah, but we've been arguing it's a bear market since the tech bubble burst back in '01. And we were talking about this as being similar to the periods you saw in the 30s and the 70s in the U.S. or the 90s in Japan. But this is the kind of environment one would expect to see: rallies, pullbacks, and unfortunately, we're still in it.
I wonder what you think about. Sorry, Carol.
No, I'm just listening. So Tobias, so then what do you do here? Do you take defensive posture at this point, or what? I mean, since we're going to see a lot of volatility in your view.
Well, I think it's going to be a little late to try to take defensive postures after the market's corrected so significantly. I also don't say you buy everything that's potentially cyclical. So you look at things like energy that's really beaten up. You look for high-quality companies that have been beaten up. Some areas in tech, hardware, even diversified financials as a way to play the market getting stronger later in the year. And I would say insurance looks particularly interesting. Now, if somebody wants to be terribly defensive, then yeah, look at some utilities, but I think it's a little late for that game.
Why? If they want yield as well, I mean, isn't that one of the only places you can go now?
Well, yes, but I think when people want yield at the moment that everything's kind of in a challenging environment, and then when everything starts racing, they kind of dump those stocks and they chase the higher beta names. So, again, if you want to balance out your portfolio with some yield and some defensiveness, I'm not going to argue with somebody like that. But I think it's a little late to take those positions.
But diversified financials, I mean, the big names here have gotten beat up pretty badly. Are you saying this is an opportunity to buy and hold? Or?
We think so. I wouldn't buy every single one of those names. I can't, unfortunately, go into specifics. But some of the real higher quality names have been thrown out. If you want to think of it as the baby of the bathwater, that's the kind of stuff we'd be looking at.
All right. So financials there, utilities only if you want yield, and insurance companies are your top pick here.
I look at energy and also tech, hardware, semiconductors, some really good balance sheets.
What do you think about the M&A today, by the way? Speaking of tech,
we're excited about it, but I wouldn't get too excited. When we talk to a lot of the partners at the M&A law firms who do some of the preliminary work, they haven't really seen a big pickup in activity either. I think investors are hoping for M&A to bail them out of some positions, but kind of preliminary stuff isn't getting us there.
I was talking last week with Marissa Campisi. She's a VC, obviously more interested in tech than anything else, but she said as far as M&A, it could go either way, right? There's so much volatility and uncertainty that companies hold onto their wallets, or prices have come down so low that people think we can go bargain hunting here.
I think you can, but you're also going to get the companies not willing to sell if all it is was a volatility-driven, plunge in their stock price. They're not going to believe that as being something much more significant.
Let me ask you about the state of the U.S. economy, Tobias, because there's a lot of talk about how much consumers are spending. Some people today think that we should be taxing the wealthy even more than we already are. Where do you stand on the whole issue?
Well, I'm like everybody else. I want to keep my money for myself. So from that perspective, I'm not a big fan of taxes going up.
But if you had billions, then maybe you would be.
Well, you can write your own check if you have billions anytime you want to the government. But, I'm not going to comment on somebody else's views.
What about the U.S. economy? I mean, the consumer is obviously strapped here. Unemployment is still unbelievably high. It's a tough environment out there.
I think you've got to be really careful when you think about the U.S. economy. About 10% of GDP comes from corporate capital spending. About another 11% comes from discretionary consumer spending. Those are the two that have the biggest, if you want to call variances or magnitude of change year to year. I mean, if you're taking a drug to control your cholesterol, you're taking that pill every single day. So that 21% you got to watch carefully. Stock market has enormous amount of influence on that 20%. About half of consumer discretionary spending, wealthier people who own stocks, and corporations do look at, or management specifically, look at their stock price to determine if they want to spend or not.
All right, well, if it weren't for the incredible volatility that we saw last week, we would say this kind of market influences people in a positive way to get rid of their money.